The RBI MPC has unanimously decided to cut repo rate by 25 basis points and it has kept its stance neutral. The MCF rate was also cut 25 basis points. Don't know what this means? Let me break it down for you in the simplest terms possible. RBI or Reserve Bank of India, which is the central bank, has an MPC or Monetary Policy Committee that meets at least 4 times in a year to fix the policy interest rate and also discuss the economy in detail, projecting GDP growth and inflation forecast for the rest of the year or the next financial year. The MPC meet was held this month from February 5 to February 7 and the new RBI Governor Sanjay Malhotra announced the outcome on February 7, that is today. Now, what did he say? He said that the MPC has decided to cut repo rates by 25 basis points to 6.25% from 6.5% earlier. Repo rate is the interest rate at which the RBI loans money to the commercial banks. Its full form is repurchase agreement or repurchase option, which means that banks get loans from RBI by selling qualifying securities and the interest they pay on this loan is the repo rate. Now, what happens if the repo rate is cut? This means that banks borrowing money from the central bank will have to pay less interest. What will happen if the bank pays less interest to RBI? It will also change the interest rate for you and it will become less. So your home loans, car loans and other loans will get cheaper. For example, you took a loan of 50 lakh rupees 1 year ago at 9% interest for 20 years. The EMI then comes to approximately 58 lakhs in total for 20 years. Now that the rate is cut for 1 year, you will pay 9% interest, but then after the rate cut, your tenure reduces by 10 months to 230 months, while your interest rate will come down to 8.75% to total interest payable of 53.5 lakh and you save 4.4 lakhs in total in interest as per experts. Now this also benefits startups and businesses because their loans are also getting cheaper. It will boost the consumer spending because now the loan is cheaper for the general public and the rate cuts are viewed as a favorable move for stock market too. So it drives a positive sentiment in the market as well. In stock market, the sectors that could likely be affected are banking and finance, real estate, automobile, consumer durable, infrastructure and power. Now coming to what is the drawback of the repo rate cut. A cut in repo rate will also mean that your interest rates on savings accounts or fixed deposits will also decrease. That is one big drawback for sure for you. Now, why did RBI cut the repo rate? For the first time in 5 years. Now, the decision was driven by multiple factors like slowing growth, easing inflation, global economic uncertainty, and the government's focus on boosting consumption. Remember, this rate cut comes after the budget 2025, which had a massive tax cut where the new tax regime was giving you a 12 lakh tax exemption. So now RBI's outcome has also made credit cheaper for the borrowers. What else was announced? GDP growth projection, which the governor said is at 6.7% for FY26. Inflation forecast is at 4.2% for FY26, which is lower than current 4.8%. Experts say that there might be a 25 basis point cut in repo rate in the next few meetings, given that inflation and global conditions ease further in the coming months. Other than this, rate cut is being seen as a welcome move by experts and market watchers. For more such news and views, keep watching ET Now.